TGIF Warriors. How's everyone doing in face? Hope everyone had a good week. Either earned or learned, hopefully both. Hope everyone had a great week. I'm just showing the trading room right here, everyone. You can see it starts before face, keeps going after face. And just a reminder, it's the last weekend to get the discount seasonal special. Okay, so like I said last week, Friday isn't really a great day to sign up because you have the whole weekend to familiarize yourself with all the different platform pricing. And in fact, Steve wanted me to bring this up because the reimbursement program. So this would be a good idea. Get the 6 month, which is at a discount, and then go with the broker that's going to reimburse you based on your trading volume to pay for your subscription. And there are many. Steve has told me that there are several that, because of their trading, their subscription is covered. And for many others, it really reduces the cost dramatically. Give me why. Were you aware of this program? Who uses this program here? I think everyone should. I mean, if you're trading, why not use a broker that's going to pay for the great content you get here? Any word on an American broker? Steve, you have anything on that? There aren't many. So who would it be? Forex.com?
Hey, Dale. The reimbursement program is for non-US customers,
okay.
but really, you know, so if you're a non-US trader, you can be involved with the reimbursement program.
Okay.
But as a US trader, we have very limited opportunities for brokers. Yeah. But you know what people should really focus on is this weekend's our last weekend with our new seasonal offer with ForexAnalytix. That's really like it's only good until Monday. So yeah, that's the one that that I think everybody should be really focused on, because that's going to go away, and that is only until the 2nd.
Monday.
Yeah.
Right. Okay, and here's the deal, guys, 2 for 1 on a month. That doesn't get you into the trading room. And I tell you, I've been visiting the trading room, and it's got a great atmosphere, supportive atmosphere. Everyone's civil to each other, and I've seen a lot of great ideas, winning trading ideas in that room. And if you're the type that spends all day on your platform, this is going to support you. So this join. Okay, there should be a link for you to just go into the trading room now. Steve has a button up here.
Yeah,
Steve,
it's right at the settings wheel. So once you go to click on it where it says go to traffic light page, then click on your settings wheel. Not that. There you go. And then it says go to chat room. There you go.
There we go. So you would think I would know all these things about the reimbursement program and see what this team puts up with. They have a dinosaur like Dale Pinkert, Dale the dinosaur with them. Okay, so thank you very much for joining, Roberto. I'm telling you, I think you're going to be very happy. I think it's an investment in your future as a trader. So again, everyone, Friday's great. You know, you could go to really go to every different form, of analysis here, and you get all these notifications. Really, what these guys have put together on the website, you could have your own Twitter feed here. You know, you go, well, over the weekend, Euro's come off a little bit. I wonder what it means for next week. Here's a couple of paths from macro, Stelios's work, and oh, it's up. There we go. Okay. So then you want to compare what Stelios did or is thinking with what Greg is thinking. And then you look for some confluence between the different methodologies. Greg is looking for one more dip here. This rally that we've had this week, he's looking for one more dip down towards 1670 or lower, maybe 1620. So this could be a decent shorting opportunity on this bounce we had from yesterday at cloud support at 117. But you know what? I'd like a little bit more confirmation. Let's see what Nicola Duke thinks about the euro here today. So here's a chart. Euro's at bullish A, B, C, D on the 4 hour, should rally back to 119.24, which is 50% of the decline. Closing back above 1835 confirms it. Okay, so Nick is saying that it's very possible that low at 117 was it. So that's great. You have different opinions based upon the methodology and also based upon the time frame. So you're not just limited to the 4 hour. You could get her daily look and her weekly look and on everyone. And we all know, based upon the type of time frame that we trade, that it can all be different. Your daily setup can be completely different from your 1 hour setup. So depending upon what type of trader you are, a day trader, scalper, swing, position, the time frame is important, and you get different messages from each of them. It's great when they're all in alignment. Hi, Ahmed, Sandeep, hope you enjoyed your birthday. Okay, very good. Hi, Luca. Luca's got a look. Let me take a look here. See what we got here, Luca. Really glad that you guys are still participating and sharing your work here. I know there's not quite as much time as there used to be. And if we don't get to it, it's not because we're not interested in what you're thinking. There's just a lot of ground to cover within a 1 hour time period. We have a great interview. There's a beautiful look of a triangle there on US dollar yen. So Luca's bias is to the upside towards 114. This is a weekly. Okay, 114 is going to be the monthly test.
Good morning, Dale. This is a monthly.
Hey, how are you, Steve?
I'm good, mate. I'm good. I hope everybody's good as well.
Are you glad it's Friday?
I can't complain.
You'd rather trade 7 days a week.
No.
So, yeah.
No, family, kid, and the attempt of a little bit of relaxation. I think Sunday and Saturday are welcome.
Yeah, it's good to recharge the battery. Thank you, Luca. Very nice look. So, Steve, did you want to take over? I mean, there's only a few things that, this is, if Greg is right, this is going to be a good shorting opportunity in Euro here.
For the time being, but it's
Blake.
Yeah, that's
Blake,
what
you want to come on?
It's Blake's.
And
yeah.
All right, and I still think that the Euro yen, this type of grinding, I think it's setting up for shorts around 33. I'll wait till next week to do it.
Yeah, I think this price action points to. I would expect, at least we were talking about it on the chat room just a while ago. I would
one more push.
Yeah,
flush it one more time.
Yeah,
131.
Most likely, yes.
Yeah, so that could be a good scalping opportunity next week. So go ahead, Blake. I wasn't even sure you were going to be here today. I know you're taking off for the weekend.
Oh yeah, I'm taking off here in a few hours. So I'll be here for a little bit. But you were talking about this weekend. I'm actually going to see one of best friends that I met actually in the military, and a couple of us are going to visit him in Minnesota. Yeah, yeah. We're going to the We're going to go to the Vikings game. So
cool.
yeah, it'll be really cool. It's Vikings.
Who are they playing? Who the Vikings playing?
Detroit.
Oh, okay.
Yeah, so it's gonna be a really hold on really fast.
Stafford. Yeah.
Yeah, it's gonna be a good game. Hold on really fast.
Okay. Hi James, welcome.
I was just telling the guys and gals, like, I closed my euro pound short. I've been scalping it over here, and if I sent it out via the ForexAnalytix. I've scalped it twice to the short side. The euro pound came really close to 161% extension. It's in this down channel. I was going to keep it over the weekend if Catalonia was going to do its referendum, but Spain says they're not going to. But that doesn't mean that they it could still happen. But I just closed it out just to take some profits. I've scalped it twice on the short side from nearing this 161% extension this morning. So I've already taken it off, and I wouldn't mind, you know, shorting it again. But there's a couple of things that I want to talk about. First of all, the UK GDP came in 0.1% worse than expected, so the pound came under some pressure. But you can see on the hourly, we're still making a higher low, and we're nearing this 38% retracement. Now that 38% retracement really comes in right here. You can see it. I'm going to put in the line right here, but you can see the 38% retracement comes in at 133.17. I do expect this level to hold. I don't expect this level to break. Well, if it does, then we got bigger problems. Then we're looking at a much bigger pullback. My stops are below there because I'm actually long the pound dollar. I picked up the pound dollar yesterday around these prices, not too far off of these prices. Personally, just because I was looking at this this level as a retest, but the pound obviously has come under a little bit of pressure. So I'm just kind of compensating for the pound weakness by shorting the euro pound this morning and making a few bucks here and there. We do have Canadian GDP now, and some inflation data as well. So if the Canadian GDP and inflation data is a little stronger than expected, we could see the US dollar Canadian come down towards this 123.85. And personally, if the Canadian GDP is strong, but not super strong, like, you know, maybe it comes in 0.1% more than expected, and we take out some stops below 124, I'm actually going to look to get on the long side of the dollar Canadian. I still am, you know, fully aware that the positioning is very lopsided in the pair. So buying it down here still makes, you know, it makes sense to me, especially with the squeeze that we saw earlier this week. And I was caught on the wrong side of the trade this week because I shorted it at like 123.70 or so. I got stopped out when it went like to 124.12. You know, I got stopped out of it. So now that if it drops back down here, I am willing to step in and get long. It's worth taking the risk if you think the dollar is going to continue to rally. Now that's where like my issue resides is, you know, what are we going to do with this dollar? I mean, the dollar, you know, rallied. It here. Let's pull it out to a 4-hour chart. You can see that we rallied past some resistance right here, squeezed out some traders that were obviously short. And even though I wasn't, you know, I'm not trading the dollar index. What worries me the most is that the trend is lower. I mean, that's pretty. I mean, it's significant how, you know, weak the dollar index is in general. Okay, and what concerns me, let's do it like this, because whoops, take this spike high right over here. What concerns me about this this dollar is that we saw a bit of recovery, a little bit of squeeze, and a lot of these moves just looks like a short covering rally, you know, like just a short squeeze. And I'm not convinced still that the dollar is turning the corner here. I mean, the dollar's showing some signs of life, and everybody's bullish the dollar right here. There's, you know, I mean, everybody's argument is yields are going up, bonds are going down. You know, it's favoring the dollar. I get it. I understand, but the price action in the dollar still isn't that bullish. It still looks pretty weak. So that's my biggest concern if I want to play the dollar Canadian to the long side. And I'll be around for the data here in the next 15 minutes. I figure I'd stick around. But there's, oh my God, Dale, I have to show you. I don't know if the volume is going to work. I want to make sure the volume doesn't work. But there's something on Twitter that one of our traders, Joe, sent to me. Oh, yeah. And you of all people could really appreciate this. I have to see if it will work. It's the funniest thing I've seen in a while, because I've what, can you hear that, Dale?
A little bit, but it's not really, you're not going to be able to distinguish the words.
Well, no, because hold on really fast. I gotta
put it up.
I gotta put it up because it's like, this is like, if I can get to it, let's see here. Let's see. I'm trying to get to the, that's not, here, let me see if I can do it this way. No, I don't want to do it that way. There's this, see, this isn't going to work.
Well, put it up in the Jumbotron room and I'll.
Wait, hold on. I'm gonna, this is just, I don't know who this dude is. So, hold on really quick. All right.
Yeah.
Hold on. I'm gonna do this. I can do this. Let's see. Let me switch the screen. It's funny, but I feel this guy's pain. So let me give you screen. Okay. Okay, watch this. Can you see my screen now?
Yeah, wait for it, it says.
Yes, okay. I got to show this to you. Okay, so this, I turned off the volume, so you can't, I don't know who this guy is, but this guy's obviously talking about some stock that's rallying. Yeah. And he's doing a webinar like this, but you got to see this. He's talking about how it's rallying here. It's rallying, and it's breaking out, and then all of a sudden, you know, it's rallying. Look at it, and then boom, look at the red candle.
Yeah.
And you have to hear his words, because he is actually screaming now, like a lot of 4-letter words.
Wow.
Wait. Oh, there it goes. Oh, I saw that, and I have to admit, I mean, things now. Yeah, now that
it reminds me of the Eagles song, buddy. In a New York minute, everything can change.
Oh my gosh, it was Joe had sent it over to me, and I was I couldn't stop laughing because it's happening.
We're making money.
Yeah, and the guy just starts. I mean, the 4-letter words that came out of his mouth was just. I was like, oh my God, because I've been doing these webinars for and live analysis for people. I've been doing that here. Hold on, real quick.
For too long.
Yeah. I've been doing it for too long, and I've been, but I trade when during these webinars. So like, I've had that happen to me, like getting run over just like while I'm in a position, Not quite like that.
It's fun, and doesn't it really make it a lot more fun for that to happen with a large audience?
Oh no, I mean people
That's
know.
why you want to do that in private, but you know,
now I get to do this. All right, Steve, it's all yours. All right, I'll talk to you guys later. But
yeah.
But no, I've been in situations where, I mean, you know, obviously where news comes out, I may be pre-positioned in a trade, and it just doesn't work out in my favor, you know. But man, that was like almost like a Brexit move on you, you know. It's
yeah. Anyway, I hope the guy's okay.
Yeah, well, I mean, probably.
I think he tweeted after that. I came home and my wife was gone.
Yeah. So you know the old joke, Dale, and I'm sorry, I'm kind of like going, I'm all over the place here. It's on Friday anyway. You know the old joke. You know, people always ask me, you know, the question like, hey, Blake, is the euro a good buy here? And if I don't think it's a good buy, I'm like, yeah, goodbye house, goodbye car, goodbye wife.
Yeah.
It's a good buy.
Yeah.
No,
yeah.
But that's an old joke. All right. Anyway, yeah, it's a good one. You know, there are pairs that, like in my opinion, that are suggesting that dollar strength is coming around. But you know, some of the ones that I watch specifically is like the Nordic currencies. Like you see the US dollar, Norwegian krona, it's getting right to 8. I mean, this is really big here. And I think this is one of those things that if I start seeing, you know, the US dollar, Norwegian krona breaking higher, the Swedish krona is also, you know, some you know, big resistance that we're dealing with here. You know, we start seeing some turns in these currencies, then, you know, that'll suggest that the dollar is really trying to break loose.
It looks like they're all, almost everyone you put up, Blake, looks like either has or is developing a head and shoulders type pattern that would take a little time to fill out. A lot of them have gone through initial resistance, but you just go back on what you showed, and you know, maybe all we get is sideways consolidation before the next move up in the dollar.
Well, you know, that's the thing, and so I'm not, you know, I'm not opposed to buying the dollar. Like I'm going to try to buy the Canadian today. I mean, if the dollar Canadian dips below 124, you know, following this news in the next 7 minutes, I'm gonna try to pick it up, as long as the data is not super strong. I mean, Canadian data in recent months has been blowout strong, and so that's the, you know, the risk here is that if it's just like really like super strong, you know, next thing you know, we're trading down, you know, we're trading back down to 123 before we turn, you know, and that I think you just got to be a little careful with. So I mean, I don't mind picking it up down here if we dip a little below 124.
Yeah, because we could still go to 26, Blake. But I'm wondering if we get up to 26, a lot of people out long-term bears, they'll probably be flipping, don't you think?
Yeah. I mean, yeah. Well, that's the thing is if we start getting up here and much higher. I mean, so let me just go ahead and reiterate about this long-term trend line. So, you know, I was playing it on the short side because this long-term trend line was still in play, you know, and my whole thought process was, well, as long as we're below here, I don't mind being short. And to be fair, for me, I've made money on a lot of these moves, these spike ups. I would short them, you know, into these spikes, and into this spike, I shorted it, and then, you know, obviously, you know, a couple of days later, the comments from Polas just, you know, stopped me out. But now that we're above here, well, you know, especially if we close the week, you know, above, like, you know, let's say like here or higher, I mean, that's going to get some people thinking twice about being on the long side of the Canadian currency or the short side of the US dollar Canadian. So but again, I'm not 100% convinced. I just know positioning is pretty skewed, and hats off to like Matt and Amanda who are in our chat room. Here, I'll put the chat room up here for those of you guys that, like, here's Amanda right here. And Matt, I haven't seen him yet this morning, but those two were really they were playing long the dollar Canadian, and it's good to hear both views from everybody in here, because I got a lot of great traders. I say I do. We've got a lot of great traders in here, in this particular room, and so it's good to hear their views. And just so you know, when I read these guys or gals, and I'm like, I've been trading around Matt, for example, for the last couple of years, and Amanda probably for the last 6 months. I have tremendous respect for a lot of these traders that have been around and, posting their trades, and I know how they think and I know what they're doing. So when, that's one of the things that prevented me from being really aggressively short the dollar Canadian earlier this week. Even though I took a loss, it wasn't that bad of a loss, just because I wasn't super aggressive. They're like, hey, the positioning's really skewed, and they were trading it on the long side. So, hats off to them. I mean, that's a great thing about trading in this community, is you got so many good minds in here, and different traders with different viewpoints, that it's good to hear it all.
It reminds me a lot of how Larry used to be, Blake, and I could just walk in without one idea, a blank slate. And within 10 minutes, there were several different compelling, actionable things for me to consider. And that's what the room is like.
It is, and again, you learn from who's in there, and you kind of figure out their style after a while. There's a lot of stuff that I share in there that, like I scalped the euro pound twice today. It's not something that is worthy of putting as a pattern in play necessarily, because, it's Friday. I don't really know if I really want to stick something new out there right now. And knowing all the risks over the weekend, it's like, okay, well, I can scalp it, but I can't, publish that stuff, because if you're on the road and you see a pattern in play, and that was from 30 minutes ago, and then, my intention is only being in there for 15 minutes, then it just doesn't make any sense. But that's where I can illustrate a lot of those trading ideas are in the chat room, and so can everybody else. So remember, you guys, this is the last weekend to take advantage of that chat room, and you have to be a semi-annual or annual subscription, or a month-to-month for 6 months or more. So that means if you've been using ForexAnalytix for 6 months or more, then you're automatically qualified. But for new subscribers, it has to be semi-annual or annual subscription. And we discounted it so much. We discounted it dramatically, the price, the last 2 weeks, because we wanted people to be able to get into the chat room. I mean, that's it, because the price is going to go up on Monday. So I'm back to our normal price, where you can.
Here's the way I look at it, Blake. I'm paying you 1 pip a month to pick your brain all month.
Well, don't pick mine. I mean, there's so many other people.
That's what I'm saying. I pay a total of 6, 7, 8 pips, but I pay a pip to you, and a pip to Stelios, and a pip to Steve, and a pip to Nick, and a pip to Grega. And you know what? I'll even pay myself a pip. So that's the cost. That's the cost of being a member. Yeah.
Hey, the dollar Canadian's coming under pressure ahead of this news, so you can see that
you got your wish.
Yeah, I mean, well, I didn't get it yet. I mean, let's see if it dips down to.
Okay.
Yeah, let's see if it comes down. This is here. Let me go over to a 1 minute chart. I mean, right off the Canadian news, you can see we have a lot of data coming out. Canada's pretty good at I think this news can leak a little bit. It's been known to, so I wouldn't be surprised if we get really strong Canadian data here in a moment.
Yeah. Wow.
Yeah. Wait, hold on. Wait for it.
Hold on, I have to change my pamper.
Boo! Oh my God! Wow.
Excuse me, guys. I'll be back.
Wow. Well, I guess somebody Somebody got on the wrong side there. Whew.
Everyone throw a market order in, and we'll see who gets the best fill.
Wow, look at that. I was like, man, this data probably is going to come in weak. There's some serious selling coming in, but let's see. It really, the PCE, well, that was US PCE. I'm sorry. So Canadian GDP actually came in weaker than expected, but the raw materials price index a little higher. Then we got some PCE out of the U.S. that came in a little weaker as well. But man, that loonie did spike up a little bit. That's a bummer because I wanted to pick it up at a cheaper price. Just didn't get the cheaper price. But c'est la vie. But man, one of the other things why the dollar's probably spiking up a little bit here is the PCE came in. Well, the one thing that's holding it back, excuse me, is the PCE. The U.S. PCE came in weaker than expected, so that's kind of holding back the dollar. Yeah. But hey, we got the Canadian is strengthening. I just wish I would have been able to pick it up a little cheaper. That's a bummer, but that's okay. Well, hey, I'm gonna have to.
Early in the day, buddy.
It is very early in the day, and I've actually got to prepare and get ready for my
Have a great time, man. I just can imagine how much fun you're going to have being with your Marine buddies.
Yes, they are my Marine buddies.
Yeah, because there's a series of the first guys that went into Afghanistan. They were there before 9/11, and they all came home with a lot of problems, bad memories, everything. Mm-hmm. And the only way that they said that they could heal was for them all to get together again. So, I'm not saying that you have PSTD, Blake, but, there's basically the bond that you have with someone that shares a foxhole with you is something that they don't get with anyone else in the world. You really don't. There's a certain brotherhood there for sure. Hey, really quick, Steven says I'm timid to be in the chat room because I don't know how to get the cool avatar. Look, you go over to your settings here, your general settings, and you select your profile picture, and you get to put your own picture up there. So once you do that, that'll be the picture you have in the chat room, and then you can see all these guys. Some of these guys have some cool ones. There's Ninja Chi, and there's Amanda and JT and Nitish in Singapore, and there's Jack with Super Mario, there's Jimmy. So yeah, and there's Chad. He's likes to fly his collegiate colors. Anyway, all right, Steve, are you here?
Yes, mate, I am here.
Okay, I'm going to pass it over to you. I want to thank Steve personally for because you guys are in great hands this weekend. Steve is covering the basic and candlestick analysis. He's covering for me this weekend, which you guys are obviously going to be in good shape because he does spectacular analysis. But thank you, Steve, for allowing me to go hang out with my friends this weekend.
Oh, it's my pleasure, mate.
All right. Well, guys and gals, have a great weekend. Steve, I'm going to turn it over to you. Have a great Friday, and make sure you guys get your. This is the last weekend for the offer, so make sure you take advantage of it.
Enjoy, bro.
All right. Thanks, guys.
Bye, Blake. Good luck.
Bye, Steve. Thank you.
Hi, Stevie.
Hey, Dale. What's up, my friend?
How are you?
I'm good. How have you been?
Good. I got an interesting question from someone earlier when Blake was talking. You're in Europe. So most FX brokers only insure deposits up to 20K in Europe, or are there banks where you could trade FX that have something similar to like SPIC?
From what I know, deposits are segregated and they're always held by a custodian bank. And that on its own should mean that the guarantee you have is the equivalent guarantee that the European system gives to bank deposits, which is 100,000 euros per client per account.
So then why do FX brokers this faced member today was saying they'll only guarantee up to 20K? What do they mean by that?
To be honest, I have no idea. I haven't checked into the legal stuff, but as I told you, logic tells me that since the money are segregated and
I'll be right back, Steve.
on custodian banks, that should mean that, you know, according to the bank that your money are being held, you benefit from the deposit guarantee that is offered to all European citizens, which is that. I don't think that you know, there's something different. I don't know if by guaranteeing 20,000 they mean something else, or added to that. I have no idea. But to be honest, you know, there is absolutely nothing guaranteed. So the thing that matters is, you know, check which one is the custodian bank of your broker. You know, if it's a good and reliable bank in a country that has a you know, a sound financial system, I don't think you should be worried more than, you know, anything you would put in the bank as you know, simple deposit. Okay, let me see. Thank you for joining, Sam. I'm just going through some questions before we start talking about charts here to see if perhaps Sandeep, okay, thank you as well. We already saw Lucas's view on the triangle. Good morning to all that say good morning here. Luca, mothers are letting kids sleep in Barcelona, so police can't close them down for voting. Yeah. Actually, you know, we were discussing, Luca, we were discussing about that yesterday on the chat room. Actually, about how much of an impact can the Catalonian referendum they have over the weekend on you know, what kind of an impact it can have on the Euro USD. And I said that it can have an impact, and we might end up having like you know, some kind of unrest happening there. But I don't think that it has the potential of creating, initially at least, like a very, very, very big impact. But it can have an impact, and it can end up being a negative impact, of course. Good day to you, Glenn. Pound. Okay, do you think from a holistic view that the pound is headed upwards towards the 140 level or back down to 128, 129? Okay, so let's start by the pound. Okay, listen, having to do with that, the pound has been holding nicely so far in this corrective move. We are still holding the broken ascending channel. And in general, as long as you know, this breakout level at around 132.50 is holding, there is absolutely no reason to turn us bearish. Now, having to do with the pound, as you understand, you know, it's a currency that's currently very sensitive. I wouldn't like to view much far into the future, because with the Brexit looming and many developments that can happen there, you don't know what you can get. But I can tell you two things for sure. First of all, I'm not really bullish the dollar in the long term, which means since the cable is, you know, is a currency pair that has to do with the British pound and the US dollar, I would have to tell you that going back to 128, okay, is not something big. And if it happens at the same time and we get like the dollar's correction accelerating, and at the same time some very negative news from Brexit, yes, it would be possible. But for the time being, I think that more or less all of us maintain a decently constructive view on the cable. Okay, so I hope that answers your question. William, you said please post the link, but what link? For the video that Blake showed. Yeah, I don't have that. Rush for the $4 today. Data incoming. Yes, we did get the data. The guarantee funds by investor compensation funds, which are supervised by national regulators. Nick says. Steve, deposits with brokers. Yes, Zach. Zach agrees with what I said. People still believe the government. Cyprus 2008 was a mess. Many UK depositors lost money. That's true, Arif, but I have to remind you that the 100, you're absolutely right. People took a big hit in deposits in Cyprus, but I have to remind you that nobody lost even a single dime for deposits below 100,000 euros, because that was the pan-European guarantee, and there was absolutely no account that got hurt because of that. We have had no incidents so far that the 100,000 euros per bank account has not been respected. So I still insist that anything up to 100,000 euros, if the custodian bank is a decent bank, you shouldn't worry about. Euro Kiwi in tight wedge, eminent breakout. Aussie Kiwi was supposed to be at 110s by now. Okay, let's have a look at both of them. Okay, by the way, before we go to the Euro Kiwi, let's have a look at the Euro. I'm still short the Euro from 119.20. Personally, as long as we stay below this zone, which was also the breakout point and the neckline of this head and shoulders formation, etc., I'm not worried at all. So I'm staying short. So that means that obviously I'm looking more likely than not for a little bit more Euro weakness. But of course, the Euro Kiwi is also a product of what happens with the Kiwi. Now, having to do with that, I have to tell you that okay. Let's have a look at the Kiwi and then we'll go to the cross rate. Let's have a look at the Kiwi. So we already saw the Euro. Now, having to do with the Kiwi, listen, today we're having a big reaction, but personally, I remain of the opinion that this can just be a retest of this zone and this ascending channel. And as long as we remain below there, I would be looking for a move, for the move to continue lower towards there. Okay, so having said that, I do expect most likely than not some more Euro and Kiwi weakness. So the matter is now which one is going to be weaker. Okay, I can tell you one thing for sure. If I completely isolated everything else about the Euro and the Kiwi, I would tell you one thing. This move lower looks to me corrective, okay, because it has been respecting this channel, because it has been slow, it has been a slow overlapping grind lower. And as you see, we have been making several attempts to break once again above this descending channel. So on one hand, I see the, how many are they? Like 2, 4, 6, 5. Okay, let's not count today. 5 consecutive failures to break above it. But on the other hand, the market keeps insisting of pressuring, this area. So I have to tell you that if we actually do break above this, I would probably be looking for another high. Okay, like somewhere there. So I can see why somebody that was short would want to remain short, but I would be very, very careful because, I would say like a daily close above 164, 164.20, will most likely resume the upside. So that's what I see with the Euro Kiwi. Now, having to do with the Aussie Kiwi.
Did you cover yen yet, Steve? Because I'm just looking at the weekly and it looks like not the greatest week. If we finish here, we're barely higher on the week and
yeah, we will
right at major resistance. Yeah,
we will gladly have a look at it immediately after the Aussie Kiwi. So listen, if I zoom out in the Aussie Kiwi, there are several.
No, do the yen first, man. I'm kidding.
I know. Okay, if we look at the Aussie Kiwi, I can tell you one thing for sure. First of all, the most important trend line here is this one, this red one. Okay, so we still remain above it. Now, on the other hand, you can draw different trend lines. You can draw a trend line from here and see that we're currently on support, etc., etc., etc. But I can tell you one thing for sure: it has been showing weakness. Okay, I can even see the potential of this being a five wave move down if we go to a new low. But on the other hand, we're still holding the 38.2. We've had a strong move higher. And I also see here a very nice confluence lower at 1075. The 50% fib, the descending the descending trend line. So, I wouldn't jump into conclusions in being short as long as we hold this area. Okay, I'm not involved with this pair. I have been involved a couple of times, for example, this nice inverted head and shoulders. But to be honest, as I've said, it's not one of my favorite pairs. Very often it is very quiet and calm. And in general, I'm of the kind of people that I don't like to trade similar currency pairs with each other, because you can't get so much of a clear bias. You know what I mean? For example, in general, the Aussie is going to be moved by the same factors that the Kiwi is usually going to be moved. So in this sense, I would rather, if I have, for example, if I have a bullish bias for the Aussie and the Kiwi, I would rather see which of the two is overperforming and be long against some other currency that has different characteristics, or the opposite.
Steve,
Yes.
I have a special announcement. Special announcement.
Go ahead.
Anyone who signs up with ForexAnalytix before the seasonal special closes, I'm offering a complimentary 15-minute Skype mentoring session to teach the 3-drive to a top formation. It's that simple that you'll get the basics one-on-one with me on Skype live, so that you could ask a question or two while we're doing it. And I'm going to teach you guys a 3-drive. So anyone that signs up between today and Monday, it's on me. A complimentary Skype session on the 3-drive to a top and bottom formation.
That's very nice of you. I will actually tell the IT guys to compose a list of people that register until then.
Okay.
Perfect.
All right, you're good, Oliver. I'll honor it. You signed up yesterday, I'll honor it.
Okay, perfect. That's very kind of you. Okay, so that's what I see with Aussie Kiwi. So in essence, I would be, if I really wanted to trade this, I would be probably looking for long opportunities anywhere below, between where we currently are and this area, 1075. So between here and 100 pips lower, I think that taking a stab of being long, if you really want to be involved with this pair, is not a bad idea. I think that it will at least produce some kind of a bounce, either from here or from the test of this trend line, or maximum from the test of this zone. So that's what I see in the Aussie Kiwi. Now, since our beloved coach Dale asked for a view on the USD yen, okay, let me say the following.
Because you showed a beautiful wedge in there yesterday, Steve, in the trading room.
Yes.
And I just keep looking at this, and I keep seeing descending triangles on the.
Okay, you talked about the wedge, so let's have a look at the wedge.
Yeah.
This is the 4-hour wedge you're mentioning, and this is what I'm seeing. So yes, I do see the potential of a larger pullback in the USD.
It's breaking down right here.
Yeah, because this looks like a nice wedge. So why not a move towards this breakout level at 110 or something?
Yeah, and so if you're still bearish the euro, and now the yen is rolling over, I was a little early maybe last week, but I stuck with it on the yen. So the euro yen's got to be a great short.
Speaking of it, here is a 4-hour chart of the euro yen. And this is why I liked it, for its initial breakdown, because it gave us this very nice steep ascending wedge. That
like the yen did. Right.
Yeah, that broke and transformed into a more flat ascending wedge. So already the transition from this ascending wedge to this ascending wedge was already a very good indication of momentum loss. Okay, and once that broke as well, we got this acceleration. Now, what we're currently seeing in the euro yen, any way I look at it, I don't care if you're going to draw it like this and you're going to call it a pennant, or if you're going to draw it with parallel lines and you're going to call it a bear flag. But in all honesty, there is nothing bullish with this little formation, right?
No, nothing.
Yeah. So
no gap high or something.
you know, Dale, and that's what people should realize. You follow what statistics tell you about a pattern, and when you realize that, you're absolutely fine with the pattern not playing out, because you know that when you see a move like this and then a move like this, once every 3 times, it might actually prove to be like, a false signal. You know what I mean? And as you said, something might happen and it might gap higher, after the weekend. But in the vast majority of the cases, this is a textbook continuation pattern for at least one more leg lower.
Yeah.
That's it.
I mean, so there's a nice tip for you guys.
Okay.
Beautiful.
Now,
I thought it was critical because we've been on a tear for 2-3 weeks, and I think it stopped where it had to, etc. So I don't know. I actually saw a case. I know there's a lot of bullishness with Greg, but Nick actually came up with a nice bearish case in it yesterday too. So
in the Euro,
guys, we record every session.
Yeah, that's very true. And we have people.
Eric was talking about it. He's at work, Steve. And he's sorry he misses it, but that's why we record it. And you can stop it when you're watching a recording. Try and stop me or Steve from talking. That's a tougher thing. But you're watching the recording. You can stop it. Go back over a point. It's a great teaching tool.
And guys, I'm telling you. It's very easy for you to. It's very easy for you to remember the ForexAnalytix channel. The URL even is very easy. It's like www.youtube.com/c. C goes for channel /ForexAnalytix. So this is the ForexAnalytix. Okay, now I'm the side of the administrator, but doesn't really matter. This is the ForexAnalytix YouTube channel, and everything is here categorized: webinar recordings, next week's previews, interview recordings, tutorial videos for people that have become subscribers of ours.
We have to get SEO on it. We should be getting more views, in my opinion, with the content.
Don't forget that there are a lot of people that watch the webinar live every day.
I know.
Yeah.
I know. I'm just saying, though.
Yeah. So, you can find all the recordings here. They're even edited with an introduction, an outro, etc., etc., etc.
Music.
Our
theme song.
Yeah. So everything is categorized for you there, and you can find whatever you want. Now, since we were sticking with 4-hour charts, which we don't usually do together, I have to say that USD CAD. I know a lot of people are watching USD CAD and have been trading it actively these days. I have to say that this rejection up here was very nice. It was textbook because, as you see, it was at the confluence of the 61.8 and this nice ascending channel.
I don't like the RSI on it, though. It confirmed.
Yeah, but don't forget, this is a 4-hour chart, right?
Okay, well, the 1 hour did too, I think.
Yeah, if that was a daily chart and we had that kind of an RSI penetrating over there, yes, I would totally agree with you. I wouldn't be liking it either, but
still means something to me, even on all time frames. Just saying, it's just me, and I'm not a zillionaire. I'm just saying it means something.
And by the way, SPX, as you see, bull flagging.
It's going to crash today, I'm telling you, with the end breaking down. Yeah.
Let's see.
It still was just a stop hunt after the news on the tax cut.
As you know, and as you remember, I have remained constructive.
I'm going to bet you a Coke that we don't get to 25.35.
Okay, I'm game.
Okay.
I'm game.
And I'm talking about the beverage.
Yeah, that's the only thing I would use anyhow.
I know, buddy. But I grew up in the 60s and 70s, so I wanted to clarify it. So anyway, I'm going to buy a lot of ice. Looking forward to the.
Richard, by the way, for our friends that asked, says deposits in licensed brokers and their banks in UK are insured by the financial services industry self-insured scheme. The FX brokers licensed in UK, which are forced to subscribe to by all brokers licensed by UK authorities, as far as I know, are unlimited in this financial services compensation scheme. In my experience with MF markets, need to push them though, but they paid me 4.5 million. Whoa. Okay, that's
wow.
nice.
Yeah, it may be the Cyprus brokers that have only a $20,000 guarantee.
No.
With what happened in the Cyprus banks,
the Cyprus banks, I remind you, though, Cyprus belongs to the Eurozone, and that's why they did. Okay. Nobody lost a single euro for up to 100,000 deposits. That's
during the bail-in. During the bail-in?
Yeah. Nobody's money was touched below the limit of 100. But there are a lot of people that got hurt, and they got hurt a lot because Cyprus was and still remains in many aspects like a paradise for Russians. Some Chinese traffic has started already going there as well. Yes, and there were a lot of Russians, especially, that had millions in the banks of Cyprus, and as you understand, for them, saving the first 100,000 euros and losing like the rest of the millions that were in there was a huge hit. I mean, for them, the 100,000 euro deposit guarantee was peanuts in comparison to the total amounts they were holding there.
Yeah, it was an attack on the Russians, they said, political.
In a very big extent, yes. Just to give you an idea, in Cyprus they speak Greek, okay, but since Cyprus has had the influence of the UK and for several years, they also, all of them, like, speak very good English. But the fun part is that no matter where you go, restaurants, etc., in the vast majority of the places you will find, for example, menus and everything else in Russian as well. I mean, a lot of Russians have like summer houses there and businesses, etc. It's amazing. If you remember, we were there a few months ago with Stelios for the FX Expo. Even, I mean, you see a lot of businesses, for example, tax offices and law offices, etc., that are specifically targeting Russians. Real estate as well, real estate in a huge extent. I mean, Russians are buying like millions and millions of Cypriot real estate.
Okay.
So these ties have not been severed. Elastelio?
I was about to say, what happens in Cyprus stays in Cyprus. So make sure you don't say much more.
Oh yeah, okay, okay, sorry. Yeah, it's like Vegas, right?
Yeah, nice place. I like.
Indeed.
Well, after I move to Greece next year, we'll have to take a boat ride. Can you take a boat ride?
Cyprus, yes, but it's rather slow. With the plane, it's like 1 hour and 20 minutes of a flight.
Oh, it's like going from LA to Vegas.
Something like that, yes.
Yeah, okay.
Yes. Having to do with stocks, as we were looking at them, there's nothing changed here. I mean, we're getting one bullish consolidation after the next. I really like to see that confluence, as we said up there, but I see no reason to turn bearish yet. There's no question about it, especially the IWM. I don't know if we saw it the other day, or I was just talking about it in the chat room, because yesterday we had the meeting, so I couldn't be there. I mean, just look at the parabolic move in the IWM. Just look at it. After it went down and tested, this parallel line of this. I mean, look at what happened. I mean, I think it's within less than 30 days. I think it's more than 10% higher. Let me see.
Yeah, it is.
Yeah, it's almost 10.5% higher.
You have a huge megaphone formation in there, but this implies dollar strength. Normally when the Russell is outperforming, because they're domestic companies,
Yes, you have a point.
a strong dollar favors the Russell. When we have dollar weakness, it favors the Dow.
And speaking about it, as you said before, and this is the daily chart, the RSI does confirm the move, right? I mean, RSI is already above 81, right? Now, speaking of the dollar, nothing has changed in my view, which means the following. I still see the potential of this being, you know, an expansion of the move higher. And as far as I'm concerned, we're back testing this support resistance area. And if I see this holding, I will remain constructive for a move to the next resistance zone, which is up there. So for me, it's very important to at least hold like 92.70, which are these weeks up there. So, you know, I'm not willing to turn bearish the dollar just yet. Okay, I think that we might see an extension higher. They told them to take a hike and move their money to Dubai. Arif says, yep, more or less. Dale, a couple of years ago, you said you were going to move to Puerto Rico. What changed your mind? Ziggy's asking. Dale.
Well, you know what? I have a new friend that had to leave just in front of it, and it's probably going to take a decade to recover from that. So tell him that I take what W.D. Gann says to heart, that if you don't learn how to change your mind, you won't have any change left. So I've changed my mind. So I'm coming to hang out with you and Stelios in Greece. That's my new fantasy. That's my new fantasy. You know, you guys have electricity, and we could work together, and I could check out the islands. So anyway, I changed my mind. And my heart breaks for all the people there. I don't think it was such a great response by our government, although I know there's logistic issues, but God, what a nightmare. In fact, I was trying to get Harry Dent on for us as a guest, and Harry Dent actually got stuck over there. So, you know, Kevin, congratulations on being a good steward and getting your family out of there. You wrote out the first one, but boy, that was one of your best trades in your lifetime to avoid that catastrophe.
Richard makes a smart comment here. He says, good opportunity to grab the assets and cash in Cyprus while leaving the population's money largely untouched. A model for the next financial crisis. Move money from the fat fish to the bigger sharks.
Yeah, I mean, I've interviewed so many people that say bail-ins. That's not going to be an isolated incident before it's all said and done. So a lot of people talk about bail-ins, and there have been different bail-ins. I think Poland, they did it with pensions. So there's all different kinds of draconian things, and that's when things are good and new all-time highs and markets and interest rates are low.
Jim yesterday, which by the way, it was an excellent interview. I mean,
oh yeah, Jim, yeah.
Yeah, Jim yesterday indirectly mentioned what is the bigger bail-in, right? The 2% inflation targeting. Do you remember what he explicitly said about that?
Yeah. So things are going to double in our cost twice as much in our lifetime.
More
which
than
they
that.
already.
Yeah.
I mean, I paid twice as much for housing as I did in that time period.
Yep.
And everything else too.
Yeah, and you know, we had this conversation in the chat room some days ago that I was writing specifically, you know, that it's really funny that the central banks have persuaded people, even economists, etc., you know, that the 2% inflation targeting is like, you know, something great. That, you know, it's, I mean, it's self-explanatory, and of course the thesis behind it is the simplistic logic that having some kind, you know, some inflation is stimulating investment, in the sense that, of course, if you have deflation and you expect your money to have more value in the future than they have today, you have no incentive to actually invest, which is, which is a valid argument. But how did we set 2% inflation as a target? You know what I mean? Why not 1? Why not 1.2? Why not 0.8? You know what I mean? It's completely arbitrary. And especially if you put into the mix the fact that to inflation targeting, 2% inflation, and supposedly we have been for years passing under the bar. Okay, 2% inflation counting what kind of products? I mean, what kind of basket of products? Because honestly, does it feel to you like you've had a 1.5% on average, 1 point something percent on average inflation during the last 10 years?
Yeah.
So,
and wages haven't kept up.
Yeah.
And we do have a guest today.
Oh, we do.
I'd bring it up.
Sorry, I thought it's.
Yeah, Henrik Zeeberg is with us.
Okay,
Gents.
perfect. Then I leave you to it. And guys and girls, don't forget, up until Monday, the offer is up, and we'll see you all on Monday. Let's hope next week, brings a little bit more volatility, because this was mostly a quiet week. Okay, have a nice weekend, everybody. Bye-bye.
All right, thank you, Steve. Thank you, Steve. Okay, Henrik, I see you. I'm going to make you the presenter. Everyone, welcome. Henrik Zeeberg Jensen. Henrik, I don't believe has a website, but you could follow him on his name. Hi, Henrik. It's great to meet you.
Can't hear you right now. Yeah, I can hear you again, I think. Hello?
Yes, I could hear you fine.
Good.
Thanks.
Good.
Thanks so much for joining us here today. So I really appreciate you being able to take the time out. I think it was a tweet that you sent me about gold, where someone was showing a very bullish wave count in gold, and I think your comment was it's like the worst time to be considering that as an asset to purchase when your wave count says that we still have a way to go on the downside. So you know what? For a few weeks it looked like he was right, and then you ended up being right. So thank you again for joining us. Before we get to the markets real quickly, I like to start with how did you start and how did you get into the industry and the business? What was it like for you at the beginning?
Well, I'll probably be a kind of a newcomer still to many of the people that are in the show here, and also people in the market. I joined in the market after the big crisis, the Great Recession, or in 2008, where I kind of saw the whole world collapsing. And I kind of asked myself, wouldn't somebody have been able to see this and actually forecast some of the things, the events that we saw unfolding in 2008 and 2009? And then I looked into the longer term cycles, and I saw that when I found out that people and old theorists actually had predicted things and events like this. So that was kind of what spurred my interest into markets, and ever since I've been trying to position myself in the right side of the market based on the long-term cycles and Elliott wave counts, and try to be a student of these market cycles ever since. So that's pretty much where I am at.
Okay. So Elliott's your preferred method. Who influenced you? Who did you learn Elliott from? Because it's really not an easy method to grasp all the alternate counts, etc.
Exactly.
Any mentors in Elliott or books that taught you how to be an effective Elliotician?
Actually, I used there's a Danish company. It's a small Danish company, and nobody really knows about that, and especially not in the international society or an international Twitter society, you could say.
Okay.
But it's a small company called Demetra, Demetra, and I have a personal mentor there, you can call it, that I follow really closely. A much more experienced guy, and he's been really right on many things, and many has forecast for many areas of within commodities. Or
sounds like you found a great mentor, because some people will mentor them and just like a doctor and say, okay, time's up.
Oh yeah.
Thank you very much. mentors are there for the duration.
Yeah, yeah. So
Right?
and it's all, yeah, it is. They are, and they should be. They should be there also, for the small daily questions that you might have on where things are going. So, but lately it's become more of a, you can say that we are exchanging, views on how we see things, and I think he's also been taking some from me as well. So, so I'm happy about that.
Okay. So we're looking at the U.S. dollar yen here. Or are we looking at? We're looking at it in an opposite fashion.
This is not the dollar yen. This is the dollar
Futures.
the dollar index. Yeah.
Okay.
And what we have here is simply, when we talk about gold, I think everything comes down to where's the dollar heading. And I've heard, on macro voices, which I follow, and also on Real Vision and others becoming, bears on the dollar already. And I think it's, one time too quick. It's too early.
Yeah, one wave premature. So you're looking for one more hurrah into the middle of June.
Yeah, and whether it's going to be June, I don't know. But the way I look at it, it's going to be, this kind of count is what I see right now for the dollar index. And if you look at that, we have one more wave going up from exactly where we see here. And you also, if you look into the long trend here, you'll actually see with the blue lines here, that will correspond with actually one top just hitting the trend line here. And you'll also notice that what you have down here, the wave 1 is actually going to become the same length, or the wave 5 here will be the same length as wave 1, which is also what 1 equals 5, as long as you have 3, which comes from 2011 here and up to this top here in 2015. Then we've had this, what everybody will say that you can't have the B here, but that actually only show that you have a strong trend upwards in the Elliott wave terms. So
why can't it be an irregular B?
It can be irregular. This is the irregular.
Irregular. Okay, so most Elliotticians allow for an irregular B, right?
Yeah.
Okay.
Yeah, they do.
Yeah, and I'm not. I just, to me, I like them because they've shaken out all the shorts, and then there's a great short.
Yeah.
Because all the stops have been elected.
Exactly. I think that's what we've seen now. I mean, we've actually seen only what I would call a healthy pullback. So if you take it, you'll actually see that it's only like a 50% Fibonacci full pullback on this from B to C here, which is quite healthy. Also, just the look of this wave is just suggests to me that this is not a new downtrend. You had some waves on this, which it looks more like a wave C to me, which is what I'm suggesting it is, and we would also suggest that we'll have to bottom out around somewhere around wave 4, the old wave 4 here, and that seems to be exactly what we're going to do. So
so from B to C, you wouldn't consider that impulsive, even though it was pretty directional.
Well, yeah, it is, but the wave C's can be quite deceiving. So these this is how I see it right now.
You know more than I. Okay.
Yeah, I don't know.
I'm learning from you. Okay. I learn from everyone. Go ahead.
Yeah, me too. So this is where this is what it's all about. This is what everybody's talking about. I just heard Mark on the macro voices also just earlier today talking about inflation or deflation, and obviously a move like this would be deflationary, which is also what I see, because I don't think we're out of the Kondratiev winter just yet. I think there is one more turn down in that winter, and I think that will come from a deflationary push or a bust actually, and that corresponds with this kind of picture that we have right here. So this wave is setting the scene for me. I think we need to touch upon up to this trend line here, and then we'll have, of course, a new bear US dollar bear market starting, which can actually take us quite a lot lower, as I see it, in some form or matter that could look somewhat like this.
Wow.
And if you look at this, because obviously this wave up here is my main focus for now, because that's also what will set the direction for gold. And if you turn to gold,
this could take the euro back under parity if we get up to 110, don't you think?
Oh yeah, definitely. That's actually exactly my point also here. Let me just see if I can move up. This one is just in the way now. Can't.
And so it would be bearish for gold. Will it be bearish for equities? Will deflation finally catch up with equities?
I think it will. Yeah, I think it will. Let me just show. Just because
Okay.
I can't turn.
I know I'm asking you too many questions at the same time.
Let's take a look at
I'm an amateur interviewer.
I think I am the amateur here in the markets, but let's. I'm trying to get to my monthly chart for the euro dollar.
There you go. You got it. You got it.
My alternative look is one, but this is my look for the euro dollar.
Yeah.
I have it right here, and what you see is that we've been in a what is actually in a very, very long cycle is a correction or a pullback in the trend upwards for the euro. But if you look from 2008 here, and you have an A going down here, A, B, C, then we have a B, and then we have the 5 phases of C going down here. So 1, A, B, very, very distinct A, B, C here. So that's definitely kind of a corrective wave in the main wave down. This is the quick one, which is usually wave 3. Then we have the A, B, C, B, C here, and A, B, C in the smaller count, which is wave 4, and then we have to expect a wave 5 going down here, again touching straight on this long-term line that I've been putting in here, 1, 3, suggesting wave 5 down here, which again, coincidentally,
equal to 1.
It would be equal to 1 exactly, and also this wave. A up here, and you take 161% extension to this wave A, gives you from B a wave C, which turns down in this area somewhere. So
do you have, Henrik, a high degree of conviction that the recent highs we've had at, I don't know, 2050, 2080, whatever it was, is it?
Yep.
That was it.
I think that's it for now. Yeah. I do.
Okay. All right.
I think that's it for now. I think we're going to see this is the main trend, getting back in, and we'll see under parity. I think we'll see down to 0.84, 0.85 for the euro dollar within a year. I think this is going to happen quite fast, and then we'll be looking for what kind of trigger could you be looking at there, and I think.
How about the Fed reversing course? They're on this mission just so they have insurance to bring down rates in the next recession. And eventually there's so much leverage in the system, we have an accident and they have to reverse course from a 2 or 3% Fed funds, which isn't a lot of ammo, but maybe that's the rate. Do you think that could be it?
I think that's what we're going to see already next year. I think that's down here, that's here. What we're going to have here is the increase in dollar, the rally in dollar, which will bring down euro, which will bring down gold, and that will be deflationary, and that is what is going to force the Fed to change course. There will be not too much of balance, sheet reduction, and I think we're even going to see another QE round of QE. Simply, there's a shortage of dollars. Also, depending on what Trump is going to lay out, any trade restrictions will also.
Maybe there'll be a war.
Hopefully not. I don't think so.
Hopefully not. But so what do you think this does to, there aren't as many people long the euro as there are long the SPDR ETF. What do you think is going to happen during this type of economic contraction to equities?
Equities, now can I take gold first? I think because that's actually where I have the most discussions with people on Twitter, and I think I think there are so many gold bulls right now, and if you look at it, I don't see any reason for why we don't have what we're experiencing here is just a bear market rally. It's been dragging out, but it's completely in line with what Elliott Wave is suggesting. If you look at Elliott Waves. If you look at Elliott Wave, that this is the counter of Elliott Wave from a theoretical standpoint. And what we saw the top in 2011. We then have seen 5 phases down, 5 waves down, 1, 2, 3, 4, 5 to A in 2015. What I think now we're seeing is, A, B, and C, which is actually, shaping up as a triangle, flat triangle. And then we're going to continue down into what will be, the final bottom, which could potentially come set in be put in 2018. If we turn to
when the Fed reverses course. So, and that could be what I thought I saw 750 in there. 909 is an interesting number to me because, you know, the high in 1980 was 880 on the invasion of Afghanistan by the Russians. So, and that was a high for a 20-year bull market. It seemed kind of like a natural place for it to come back to.
Yeah. Yeah, yeah, you can say that. That's one point. What I'm looking at is really that, you know, there seems to be some pullback areas, and one area would be to expect would be, you know, 890 here, which will be the 61% you know, FIP.
Yeah, and that was a high in 1979, 1980.
And exactly.
If you go back and look at it, that was the high.
I don't think I have it
here. Then we went to 200.
Exactly, and I think, and for a long time I was actually, you know, thinking that would be it. There are some suggestions that because simply the length of wave C, if we just take it here, we have 1, 2, 3, 4, and 5 here, and this count I have done more, you know, in more detail and can show you later. And then we have what is very clear to me, an A, which, you know, the wave A here of itself is an A, B, C, A, and you have the B, you have the C up here, which is a triangle, and that will be a continuation of the whole, you know, form and shape structures we have here.
So would you change your mind if we took out this is a monthly, this month's highs? Would that change your mind?
Definitely it would, but you know, it did come in. It was quite handy for me that you had this kind of candle here this month.
Yeah.
I mean, this is the kind, you know, you just had a touch and fun. This what could turn out be a, you know, very important trending channel. And this is, you know, confirmed next month, you know, by, you know, continuation, which I expect, and we'll even see this small upward sloping trend channel being taken out within the next couple of months. You know, and then we have the triangle that'll be taken out. You have a, you know, a natural target, which is down here somewhere. A lot could be suggesting it'll be only 890, but I think we're going to go lower, you know, due to the structure of the whole C wave that we're going to see here. I simply do not think we're going to have a C wave that's only going to be like 38% of the entire A wave. That will be very unnatural.
So yeah, it could be a fib extension of A to get it down there.
Yeah, so you know, 700 for US, you know, gold in US dollars is my expectation for next year somewhat. And it, you know, I just saw yesterday that Harry Dent, you know,
that's his target.
That's his target, and I sent this to him and said, you know, I think I got the count for that. So so this is where that's what I'm aiming for. I obviously this will be a life-changing opportunity, you know, because, you know, the thing is that I'm probably the biggest bull in the market also. It's just the timing of it that I disagree with a lot of people on.
Yeah, so you back up the truck down there.
I will back up the truck down here a whole lot. I think.
And dig a big hole in the backyard.
Yeah, I think what we're going to.
What's your after you do that, please, you know, email me your address.
Sure.
The great looks, Henrik. I mean, very nice looks. And it's interesting, you know, you know, the tweet that you put out, this was exactly what you wanted to talk about. So I'm glad to give you a platform to get your views out.
I'm happy for that.
Do you want to share what you think could happen in S&Ps or Dow or?
Yeah, let's do that. I think you know, S&P. Let me see. It'll just take some time here. Apparently, again, I need to go a little back in my charts. I think we are very close to a top in the S&P. I know I can see this extending a lot further. What I actually also see is that if you have, again, the wave structure, I need to show that to you just a second here. I thought I was on it. So if you have the S&P right here, I just need to find the.
So you're already drawing fibs from these highs up here, and then looking at retraces.
Yeah, because, you know, also on the way down, it will actually to some degree also tell you what kind of levels going up that will be of interest. Because if you can start looking at the things or the points when you get down. I know this is quite controversial as compared to how others does this, but the reason, you know, I'm saying we might get very close to a, you know, an absolutely high here is that, again, if you have the wave 1 here, wave 1, and you have the longest wave, it's wave 3 up till, you know, top in 2015, then you have actually, you know, an equal wave 4 to 5 year of similar length of the one going up to 1. And that would suggest, you know, we should have a top around 25, 15 to 50. So I'm saying we could get, and if you look at the kind of also the look of, you know, the spike or the kind of, you know, what do we call that? A pennant here, you know.
Rising wedge.
Rising wedge. That's what we call it. Sorry, yeah, rising wedge.
You need to talk to an old man to know what that is.
No.
All right.
Yeah, rising wedge here, and if you see that, and you also see that we've broken some of the resistance lines here, I think we're going to, you know, see some up and downs action here, but I think we're getting really close to the absolute top in this market here. And then, you know, as yeah, I don't know.
So then at the end of the Fed reverses its course and we get a recovery, and then something else takes it down for C.
This something else is actually, you know, I think we're in the bigger one for this time. If you look at the very big picture, what we have had now is a wave B getting up to the high here. I don't want to try to see if I can flip through my chart here, but we have actually the wave B in this secular bear market that we have in equities right now. So this is actually going to take us a lot, you know, very low.
So this is an irregular B, even though it took out the old highs by 600 points?
Yes. Also, do you have to consider the inflation of this, of the, you know, equities?
Oh,
so
okay. The debasement of the dollar.
Yes.
Oh,
exactly.
Okay.
So what I think, you know, so I'm not going to play this game before I see it, and actually the majority of my game is actually focusing on the gold and miners. I think we'll be able to buy miners at, you know, ridiculously low levels around.
There'll be penny stocks at 750 gold. These miners.
Yeah.
And a lot of them will go out of business, won't they?
I think so.
Because of production costs.
Exactly. I think that, but you can have this can be a spike if you look at the you know, the gold here. I think this will probably be a spike down to this area, so you won't have, you know, months to get in. I think there will be an opportunity to get in as this spikes down, and, you know, immediately after something, you know, is announced from Fed or something, we'll see. So
better to be a little early than a little late on this one. I
think this area down here, this is where you need to start looking into it. And what I'm doing is that I'm looking into the individual miners also to see how their, you know, patterns are looking, what they look like, so to see if I can, you know, spot the bottom. But I also have a range of, you know, indicators in place to say when do we actually see the bottom. One thing is of interest actually. You know, my mentor used to say, you know, always have a bull market. Then you also always see RSI between 40 and 60. And it needs to break before 60 to do so on the monthly. Look at this, you know, this is not a bull market. This is just a bear market. So the monthly
RSI has to trade above 60 for it to be bullish.
Yeah, this is a bull market. This is what you have over here. This is a bear market. It's a bear market rally until it proves otherwise. It goes and your rallies are above 60. And then,
you know, RSI is one of my favorite tools. That is really a great pearl. That's something I didn't know. What a great interview, Henry. Really? You. So let me ask you this: you don't? I didn't see a website. Looks like you have no axe to grind. You just trade your own account.
Yeah, I do. I actually, I'm you know, looking into, you know, if you can get this right, I think, you know, it'll be nice to have your own account and your own money into this. But obviously, at some point, it'll also be interesting to do it for you know, for clients. Haven't been my focus.
So for right now, and you're considering maybe you know, having a hedge fund or managing money down the road. Is that what you're thinking?
If I can, you know, find the right opportunity, I would love to do so. Yeah, maybe somebody will hire me in if I get this right with the gold here.
Okay. All right. Well, Henrik, you are now my trading warrior brother.
Yeah. Well, thank you.
Isn't that life changing? Huh?
Yeah, that is definitely.
Really great to meet you, and you are now part of my intelligence gathering.
Thank you.
Really like you. You showed some stuff that many Ellioticians aren't talking about. So I I especially like this fact that, you know, it sounds like what's going to happen here is no matter what you own, everything's going to go down in value. Do you think the bonds will also continue, rates will go, yields will continue to go up during this phase in the market where there's really nowhere to hide but cash? So you're just long the dollar and short everything else into sometime next year?
This is my, you know, when it comes to bonds, this is really the weak point. You know, that's where I have difficulty.
It's a weak point for everyone.
Yeah, I don't think we have seen the absolute bottom in yields. I would say put it something like that. But the trend, the path down to that, I really struggle. But you know, obviously, I think yields will rise for some time now. Because
the yields are going to be the pin that pops a bubble. I mean, people will equate higher yields with being bearish for gold, but they will not equate higher yields being bearish for equities because they're saying, you know, it's going to help the banks and that means economic growth. But it's a reason why rates are going up. If rates are going up just because it's a preemptive act on the Fed, doesn't mean it'll be bullish for the market. In fact, I saw another guy, I think it was Ray Dalio, said that this could be a lot like 1937. And in 1937, we were coming out of the Depression, but then the Fed started tightening again and took us into another mini depression that we didn't come out of until World War II. So,
I think he's absolutely right on that. That's also my, if I had to point to a year, it would be 1937 as well. So I think it's well.
Wow. So we're kindred spirits. We're thinking a lot the same in gold and everything. So I guess I like people that agree with me.
we all do. Yeah.
Huh? So there's something wrong with that, although I don't mind a good debate every once in a while. So thank you so much, Henrik. I'm going to tweet this interview out. Keep in touch with me, and you know, if you're welcome to tweet some of your ideas in my stream. Okay.
Will do. Will do.
And thank you so much for coming and giving some views and edifying face today. So everyone in the community, please thank Henrik for coming here without an axe to grind.
Thank you
share
very much.
his views. I'm sure it wasn't easy to become an Elliottician, and you know how many years would you say it took you to really start seeing things clearly as an Elliottician?
It's taken me the best of the entire time I've been here. I'm probably not even there yet, but I don't think intermarket analysis, when you do that and you get it to fit up all markets and the forecast that you have for them are falling in line, that's when you feel you got something right.
You got some conviction. So it's a confluence of things.
Exactly.
All right, partner. Thank you so much, Henrik. Have a great weekend. Face, have a great weekend. And we'll see you on Monday. Remember, the seasonal offer ends. If you want to be part of our chat room, you got to move. And also remember, I'm offering a complimentary 15-minute Skype call with you if you sign up before Monday. So, Henrik, have a great weekend. Let's keep in touch as these market moves unfold and try and help as many people as possible avoid stepping on landmines.
Will do. Yes. Bye-bye.
All right, partner. All right, Steve, have a great weekend. Stelios, everyone in Face, have a great weekend. And most of all, don't just count your pips, count your blessings. Enjoy football over the weekend, and I'll see everyone on Monday. Adios.